Hi, this is PR Sundar. Welcome to Post Market Report, sponsored by Delta.exchange. Just one small advertisement. I'm coming back to Chennai. I'll be in India for 2 complete months, July and August. So I'm planning to conduct some mentorship program. So that is only for Ultra HNI clients who have at least 5 crore capital. And because my fees itself will be about 25 lakh rupees, of course, plus GST also. So anything we collect, we have to pay 18% to Nirmala ji. So if you're interested, you can contact our office. Coming back to the markets, market was in expected line. I told you already, Friday evening, the Moody has downgraded US debt. So because of that, the US futures fell. It fell on Friday evening itself. Then today morning it fell further. And because of that, most Asian markets were down. I would say we were actually doing better. At some point of time, there was a good amount of buying in banking stocks. The Bank Nifty has actually gone up nearly 400 points from intraday low. And then, Nifty future crossed 25,100. But then anyway, the global markets were weak. US futures are weak. So again, market came under selling pressure. And, finally, Nifty is down about 75, 80 points. That is okay because we were very, very bullish. Okay? The point here is not 75, 80 point fall. The volatility index has shot up nearly 5%. And the weekly option premiums were not shooting up because of time value. But look at the December options. Look at the December 25,000 or 26,000 call and put. At some point of time, both calls and puts were trading higher. And only towards the end, when market has gone down significantly, the calls came down, but calls came down a little bit, but put premiums have shot up. So clearly, the fear is surfacing. We need to see how the US markets are going to close today. As long as they are not falling big, then our markets will recover. And another thing I told you over the weekend, that on Friday, there was an institutional buying of 14,000 crore. Yeah, I was also surprised. How come it's so big number? But then later I understood that, the real picture is different. And Singtel, that's a Singapore telecom, sold 12,000 crore worth of Bharti Airtel shares. So probably their selling is considered as FDI selling. Foreigners, when they come and invest money in India, it comes through 2 routes. One is the FPI, Foreign Portfolio Investor, or FII, whatever we call it as. Another one is a foreign direct investment. So probably this 12,000 crore would have come into India to Bharti Airtel as FDI, foreign direct investment. So now they are selling, so it will not be considered as FII selling. Alright? So, but the people who bought the shares, they are FIIs and domestic institutional investors. So the buying figure looks very, very big. Otherwise, if seller is also FII and buyer also FII, the net figure should be almost 0 only. But how come the net figure is 14,000 crore? So I think that must be the thing. So if you remove that, the buying was not very big. It was just only about 2,000 crore on Friday. Today's data, I don't think that it would have come by this time. But one thing is clear. On Friday itself, when the markets corrected a little bit, people have sold call options aggressively. And today, people have sold call options even more aggressively. Even 25,000 call, 25,100 calls have written aggressively. But at the same time, you have to remember what happened last week. Last Monday, market shot up 1,000 points. Then came down 400 points. People left, right and center, they sold call option. Then Thursday, shot up another 500 points from intraday low. Making trading very difficult. So that's why it's better to be on the safe side, not too aggressive. Today morning I told you one can consider selling 25,500 and above call options with appropriate stop loss. So those premiums are slowly going down. So our market is definitely like 2 step forward, 1 step backward. Now markets are correcting a little bit. Anytime it can reverse. And in fact, today the bank Nifty was looking really very good. It was the Reliance and IT stocks, Reliance, TCS and Infosys. So these 3 stocks dragged the markets down. Of course, at some point of time, they may recover. Because the US markets are down, the Nasdaq futures are down. So naturally, IT stocks will be coming under pressure here. So as I told you earlier many times, these IT stocks have to recover in order for the market to take out all-time high. So until then, it's going to be a consolidation only. And today, surprisingly, auto stocks have done very well. Anyway, I have not been bullish about this auto sector and FMCG sector for the last many months, except Mahindra and Mahindra. Of course, Mahindra and Mahindra stories are different. The most successful Indian manufacturer, right? So other than that, I'm not very bullish due to the local taxation and other things. And even Mahindra and Mahindra also, at about 3,000, it is not a good buy because a tough competition is expected from Tesla. So that is there. So anyway, so we will see what is going to happen tomorrow. It all depends upon where the US market is going to close today. So hope you enjoyed watching this video. Thank you for watching.